Okay, so billionaire financier and fund manager Ray Dalio has increased his positions in a few different stocks. And I thought we'd take a look to see at what kind of stocks is Ray Dalio adding to his portfolio at the moment. I think oftentimes we can get caught up in this YouTube world slash retail trading world of looking at popular stocks. And I think sometimes to increase our horizons, it's good to look at what some other people are doing and some more traditionalists are doing. And somebody like Ray Dalio, you can't go wrong. I mean, he's built one of the biggest hedge funds. He's done well over time. So even if you don't agree with his investment strategies, it's still a good opportunity for you to look, to understand, to learn. So nothing I'm going to show you here are investments that I've looked into. I've looked into them a little bit just to make this video and to do some learning, but I'm not endorsing investing in any of these companies. I've not got any of these in my portfolio, but Ray Dalio has. And we're going to look to see if there are any themes or trends we can see amongst his investments. So what I've done is I've kind of summarized it here. Let's see if we can take a look at them together. So the first one he's invested in is called 2U. Now, 2U appears to be an online education platform which allows online learning and courses to be taken place. So it's a SaaS model, cloud-based, which we know is very popular amongst investors at the moment, and they can command very high multiples because it's a tech business model based on recurring revenues, which ticks a great box for these types of investors. And it's an interesting one because we know that this type of play has had good strength during COVID, but this particular company, 2U, has been around for 13 odd years. So we know that going back even before COVID, a lot of universities, particular open universities, and they occur a lot here in the UK, were using these types of platforms to allow people to take courses online, to take their degree courses online, to take their examinations online. And therefore, you can see how platforms like this have been spun up. But now, given COVID, there's a whole new target audience where even secondary schools and primary schools and nurseries are looking to adopt similar technologies where they can educate students and children remotely online. And this platforms seem to have picked up some traction. So they've managed to secure 2 partnerships with Oxford University and Howard University, 2 really big establishments, and that's a good feather in their cap. And more importantly, revenue has grown 30% year on year to $237 million. Which is interesting. Now, you'll notice that these stocks, when you look at them, will have EPS losses, and that's a theme amongst these 3 that we're looking at here. So it seems like Ray Dalio is comfortable purchasing growth companies with losses on EPS, but he wants to see revenue growth. And I think that's an important lesson which we want to take away here. We should know that intuitively as well. We spoke about this with Tattooed Chef's earnings the other day, and even the likes of Palantir and some of these others. You shouldn't be surprised if you're seeing losses in high growth companies. As long as the revenue and what drives the revenue, i.e. their user base, is growing up, that's what's important here. And that's the case here with 2U. So Ray Dalio in this particular stock bought 133,000 of the shares worth $5 million. So it's not a huge investment for him. We don't know what price he bought it at. So it could have been even a less. Maybe maybe he got in on a private round. We're not too sure. The stock is currently trading at $37 with a price target of 62.5, which suggests a 6% uptick. And this is based on tip ranks. I think this particular stock would have had seven recent analysts leaving reviews, okay, with an average price target of 62. So that's 2U. You can see how that's a bit of a COVID play. It's an interesting one. I can see there being an addressable market going into the future. A lot more schools, and even commercials and businesses will be looking to put training courses and looking for platforms where they can educate and interface with staff, with employees, with students, with children online. Okay, so that's 2U. Now, the next one we have is One Life. Okay, so One Life also trades as One Medical, is a chain. So this is a retail chain, in essence, of primary healthcare clinics. So this is a very different model. So you had the SaaS business there, and here he's going for a traditional bricks and mortar primary healthcare chain. So they run pediatrics, mental health, and family healthcare in these different locations. They've got 100 locations in the US, as you can see there. But they also introduced a virtual offering, i.e. telehealth. So we know there's Arc Innovation have a big position in teledoc. They're big believers in teledoc. So Ray Dalio has opted for this one with their virtual health offering. So they've got a mobile app where you can book appointments, you can speak to physicians, you can renew your prescriptions, you can have a video call with the clinicians. Now, they've also got just on that point, sorry, in the mobile app, it'll be interesting if I was researching this company, what I'd want to do is understand, is this a bricks and mortar company which has just, half-heartedly tried to pivot across into a virtual offering? Or do they have history in building out this platform and have a true technical base in their team? Because I know from experience, a lot of these bricks and mortar companies, when COVID hit, tried to spin up an online offering at the last minute just to make sure they can service their clientele. But do they have a deep technical prowess in their team? That would be interesting. If they want to compete with the likes of Teledoc and Babylon and all these other platforms, that's what I'd want to be looking at. Now they've signed a definitive agreement to acquire Iora Health for $2.1 billion in stock. Now, Iora Health are focused on Medicare, so that's a big opportunity for them. It's a growing market, so that's interesting to see that they're acquisitive and they have ambitions in the space. Revenue, again, on this stock has grown year on year, 54% to 120 million. So these aren't the biggest of stocks that Ray Dalio is positioning himself in. And memberships have expanded 31% to 620K. So good growth in memberships. Now, this particular stock, 1M, ticker symbol ONEM, is trading at $23 with a price target of 40. So this is suggesting a 70% upside if you invest in 1M. Okay, very interesting. And the analyst added, looking ahead to Iora and 2022, we are tweaking our estimates as we await the closing of the deal, estimated to be in Q3, but are broadly positive on the increased profitability profile for the 1M business, despite the continued growth in centers. Okay. Overall, we see 1M continue to grow at mid to high 20% organic rate with improving EBITDA profile. Okay, so you can see Ray's kind of balancing Mr. Ray is balancing his portfolio with some tech companies, and he's also got this traditional steady growth, 20% a year, EBITDA delivering type of business. Now, the third one we can see from Tip Ranks is Cirrus, ticker symbol CERUS. Now, this is a biomedical products company, so it's interesting. They've developed a new product called Intercept, which is a blood safety program. So I didn't realize this was such a big market, but apparently when transfusions are happening, you want to ensure safety, and this is a $2 billion market cap opportunity. So what they're saying is their technology reduces the pathogens and allows safer blood transfusions for care providers. Now, they've delivered partnerships with US centers for Medicare and Medicaid, and again, their revenues have beat. So it's 31 million, which is the best in 2 years. Now, Dalio has 180K shares in SIRS, and they're said to be worth about $1 million. So again, not the biggest of positions. Again, they are also EPS losing, but he believes this is a fast-growing company which he can position himself into and would deliver growth for him. Now, the analysts at TipRank, there are 11 analysts on this one. 9 are giving this a buy and 2 are saying to hold, and they're giving it a price target of $8.75. It's currently trading at 6, and that suggests a 45% upside. Okay. Oh, sorry. So that is the stock has a strong buy consensus, based on 4 unanimous strong buys. Okay. So the forecast is an upside of 46%, which is really strong. So there you have it, guys. Those are 3 stocks that Ray Dalio is looking at. You've got 2U, you've got ticker symbol 1M, and ticker symbol SIRS. Now, I'm not invested in any of these currently. I just spent some time looking at these just to get an idea, like I said, of what are other investors and good experienced fund managers looking at, because our portfolio can't just be AMC and crypto, right? It can't just be AMC and Dogecoin to the moon. Like, we've got to be a bit more sophisticated in our approach. We need to sometimes look at investors who, even though we may think they're a traditional investor or we don't agree with their thesis or with their rationale around investments, we should still understand, what logic are they going through? What kind of stocks are they looking at? What kind of results have they achieved in the past? What's important for them? What are the themes and trends? And one thing I can take away from this is he's clearly balanced his portfolio between e-learning. He's got a bit of he's got biomedical in there, and he had some bricks and mortar healthcare in there as well. So these are all resilient plays. If you look at when COVID hit, learning has to continue, health has to continue, and obviously biomedics continues. So he's picked resistant companies to turmoil, and he's mixed it between technology and bricks and mortar, which is interesting. You can see he's focused on companies which are delivering revenue growth and subscription growth and user growth and location growth. He's looking at these lead measures, not just reacting to profitability, which oftentimes inexperienced investors can do. He sees it that, look, if the company's loss making, it just means that as long as we're trending the right direction, we should be EBITDA and then income positive in the future, which is when he'll see his return on the stock. Now, hopefully that gave you a bit of an insight into how other people do it. I hope that was useful for you guys, and we'll see you in the next one.